We're going to talk about how the banks work, okay? Keep in mind that when the government also has clients in a sense, they have vendors. Anyone who's ever been to DC knows that the federal government has contracts with private sectors and so on and so forth. So that money is being handed out as paychecks, okay? When you take your money, like for instance, the chief is a city worker. He's a city government employee, right? So he's getting some of that money. Your federal employees, your state employees, and all of their vendors, all of their customers, all of their clients, when all of that money, those transactions are happening, people are receiving paychecks. When you deposit your paycheck in the bank, understand that the bank is not using their own capital, they are using your currency. They are also never held responsible for their irresponsibility, right? Whenever bank systems fail, what happens? What does the government jump in and do?
Bail them out.
That's right. So the bank deposit. I just talked about that. Banks are not accounts that safely hold your money in trust for you. You think that when you take your $3,000 paycheck to the bank, that the bank's holding on to it for you in an account with your name and your account number. That's not true.
Oh, God.
When you deposit currency, the bank can do whatever it wants with it. It typically does two things. It gambles it in the secondary market, which is the stock market, and it loans it out to others for use, and it profits from the interest gained on the loan, which is your currency. Banks are allowed to reserve only a fraction of your deposit, and then they can loan out the rest. I also want you guys to know that there are several banks that have a reserve ratio of 0%. That means they don't have to keep any of your money on hand. They can loan out 100% of whatever your deposits are. This is called fractional reserve lending. If a bank has a 10% reserve ratio, so we just want to explain how this is working. Some banks have 3%, some banks have 5%, again, some banks have 0%. Lola, if you deposit $100, the bank only needs to keep $10 on hand in case you want some of your cash. The $10 that they're keeping on hand is called vault cash, okay?
Wow.
Your account states that you have $100, even though technically the bank doesn't have it anymore, because they created an IOU called a bank credit.
Yes.
All right.
That's crazy.
So Lola deposited $100. The bank available credit is $90. So when you deposited your $100, the bank says, "Ooh, I got $90 in capital." Okay? Plus your $100. Well, how is that? Because they just make up numbers. So the bank technically has $190. If you multiply this exponentially, this is how the banks are creating currency. All right.
Wow.
Also,
that's crazy.
Yeah, it's crazy. I know. It's also what we call rehypothecation. And we're going to go into this later, but rehypothecation is basically the multiple sales of one item simultaneously. There was only $100 from Lola. However, the bank now says, I have $190. We're going to loan this money out, and we're going to do the same process with everyone who comes in to deposit their money. So we're going to do this real simple. The bank takes $90 of your 100, right, Lola? And the bank's going to loan out $90 of your dollars to Jim. Jim is going to buy a car from Bob. Bob is going to take that $90 and deposit it into his bank. Guess what? The bank got his $90 too, okay? So Bob gets, because it's 10%, $81, loans it out to Dave. Dave purchases something from Steve, and the cycle is constantly repeated. Keep in mind, in addition to loaning out your money, the bank is making money on the interest that needs to be paid back on those loans. Wow. These bank credits are going to exponentially multiply, and that $100 that Lola deposited can create $1,000 in bank credits. We didn't even talk about the interest on the loans.
Wow. I wish I could have that $1,000.
I know. You don't get the interest. That's your money.
So,
It's-
yeah, they're making money off of my money, and I'm
you're,
getting
and as
nothing.
a matter of fact, you're losing money because, and I didn't
Yes,
in the slides, but consider the bank fees, insufficient fund fees,
yes,
right?
yes.
International use fees. If you go to Hawaii, if you go to Mexico, you use your card, they're going to pay you an international fee. So they have all of these additional fees in addition to this.
Wow.
92 to 96% of all currency isn't created by the government. It's created by the banking system.
Hmm.
And it's basically the rehypothecation of your currency.
Wow.